What's up, everybody? Welcome back to another episode of the Halving Report podcast. I am your host, Brad Mines. The price of Bitcoin is 59,000 US dollars, and we're about 3.5 years until the next Bitcoin halving. Today, we're welcoming back Eric Yakes to the show. Eric was on the Halving Report about 2 years ago, and funny enough, the price of Bitcoin at that time was just slightly higher than it is today at 61,000. We're at 59 today. Did you expect that? Would you expect that back then, Eric?
Ooh, that's a good question. I actually don't know what I was thinking back then. Around that period, no, I don't think I did. I think back then I was expecting Bitcoin to go into the hundreds of thousands,
Yeah.
and I was expecting some sort of a crash. But yeah,
Yeah, it's funny. I think back then, I think we were all had the same mentality that we thought Bitcoin was just getting started, but little did we know we were already so close to last cycle's top already.
right.
Pretty crazy to think about. Um, but yeah, no, last time we had some good conversation. You gave us a background in economics and finance, and just wanted to start off by asking you, so you've been in the space for a few years now, and wanted to ask, how has Bitcoin helped you develop in other areas outside of economics and finance, and is there one particular area that's kind of progressed you further than others?
What do you mean at like a personal level or for
Yeah,
like
definitely.
business?
Yeah, personal development.
Oh, okay. Hmm. I don't know. I've honestly been a little bit less of like the I guess Bitcoin cultural type. Um, I I think I came into Bitcoin. Okay, so one of the things that kind of annoyed me as I got involved in Bitcoin is that I had a lot of cultural overlap with things that I already did, and I'm naturally a contrarian. So it was like for the first time, I was meeting all these people that did things that formerly I was distinct for doing. And now we're kind of, well, a lot of Bitcoiners do this and they're not as unique, which made me not want to do them as much just because a lot of people, like meat, for example. I was like really into barbecuing and meat way before Bitcoin. And then it was like a huge cultural thing in this. And I'm like, it doesn't make me as cool being the meat guy because everybody in here is a meat guy. Um, but I think like, in terms of the low time preference, all of these other ideas, honestly, I think a lot of that is just because I was already very deeply philosophically focused on economics. Like a lot of my philosophers are economists. I view economics as it's a social science. It's a particular form of philosophy that it's the most I guess like tangible form of philosophy that we really have. Um, but yeah, I don't know. I don't really have a good answer. I'm sure that there's some things that I'm not really noticing. I think like as I pursued entrepreneurship, specifically in this industry, um, it's definitely just been something where I've gotten a lot more comfortable with. I think I've gotten better at balancing my life over time because I've had to manage this really strong, like wide network. I'm always kind of talking to a lot of people, and I'm kind of at the point where I can't communicate with people as much as I like. Got me a lot more efficient at doing that and managing time, how I spend it with different people.
Right, right. Where are you calling in from today?
I'm in Denver, Colorado.
That's your home, right?
Yeah, yeah, yeah.
Now, last time also on the podcast, you said you definitely weren't a maxi. Is that hold true to today, or how would you describe yourself?
Yeah. Yeah, so actually I'm right. I have a piece and I usually never uh well, I guess the first thing I'll say, that's funny that I said that in the last podcast, just because normally what I try to say is I don't know what Bitcoin maximalism actually means. Um, I think a lot of people have different definitions for what that means. And like, for me, I've always just been, I'm only focused on Bitcoin, but the black and white views of how it's going to scale and whether or not tokens that are different are valuable and all these other things are really just nuanced technical discussions. And I don't need to build a culture around those ideas. But from the perspective
Mm,
of Bitcoin is 100% the thing that I focus on, that's kind of, um, and so I'm writing a paper right now that's kind of going into a category that I think is underrepresented, but I'm not done with that yet. So I don't want to speak to it. But I think that there's kind of an underrepresented category. You have two different ends of the spectrum between like whatever you think a Bitcoin maximalist is, and then there's some extreme version of that that people really don't like and they use it as a slur, and then there's like really smart Bitcoin maximalists that have, very thoughtful reasons for why they're doing it. And then the same thing goes for like crypto. There's very intelligent people in crypto that have a very different philosophical view and prioritize things differently than people in the Bitcoin world. I don't lean in the camp to where I really think they're right, and I lean in the camp to where I think that they're on the margin going to be pretty wrong. But nonetheless, well-intentioned, good people working to solve hard problems, and actually we can learn things from. And then there's really extreme crypto people and like scammers and fraud and all these other things, and that exists too. But there's kind of these black and white views of the world that I generally try to avoid, but I think I naturally get into that conversation one way or another.
Yeah, definitely a spectrum, I believe, as well. But just kind of funny how we talked about. I was re-listening to our show, and he said that, so I'm like, oh, let me ask him what he classifies himself today as. But another question
When this
around
paper
that
comes out,
maybe.
I'll say that. So yeah, when this paper comes out, I'll say that I classify myself as this category. I don't want to say I'm not something as much as I want to say here's what I am, and then you can
Mhm.
qualify that with what you think the other things are.
Okay. Uh, what about owning a crypto hardware wallet that's Bitcoin only? I find that's pretty maxi when people that don't want any other coins that are compatible with, say Trezor has like their Bitcoin only version, but then they have, ones that have thousands of cryptocurrencies on that. Do you think that kind of might define somebody a little bit more black and white? To me, that's pretty maxi when you only want a Bitcoin only wallet.
Yeah, I'd say that that's a pretty maxi move. I those are the wallets that I have, I guess. So whatever that like
Yeah.
I have no if there was any sort of a need that I would have for another asset, then it would basically be some type of stable coin or exposure towards that at a point in time. There's like new solutions with wallets that we can't use in the US for keeping, stability while in Bitcoin. But like outside of that, I would have no other reason. If that's starting to change, I think, with some, there is actual securities asset issuance that is happening in token form through like liquid that's being done in like a regulated manner, but it really just isn't a retail type use case. And like, I think my take on a lot of that is that like a token, what is a token? A token is a digital string of information. What's bad is how people use that tool and whether or not that is the best way for people to make an investment in something today. And that's where I think things are either, at one end of the spectrum completely fraudulent and they're scamming people and there's false marketing. And that's really how I define what I'm against is false marketing and seniorage. Using a token that has no cost to create and using the dilution as a mechanism to inflate the value of an incumbent base token holders over time
Mhm.
and not being forthright in how you're doing that. And then whether that actual token gives you access to any sort of value that it supposedly represents is very questionable in most cases. Um, and even if all of that is made completely transparent to people, the question is any sort of if you're not falling under a security and the property right assurances that a security offers based on common law and based on this entire legal system we have backing it, then the question is that the ideal investment vehicle for people today? It's not that I don't believe very long term in the future eventually law will recognize these types. It's a much more efficient way of moving value than like here's my stock certificate that I can only hold through Fidelity and that's it. Being able to trade these things peer to peer and all that's cool. They don't want you to be able to do that. But if that happens and we do have securities represented as tokens or novel instruments that are effectively achieving similar outcomes, then that's good. I just think it's going to take a really long time, and what exists today is not that. So yeah, that's why I guess I have a Bitcoin only wallet because I'm not interested in anything. But if there ever was something I was interested in, I would want to have a wallet that's compatible with all those things. I think for companies that are building this kind of technology, it's tough because they have to make a decision of do we want to be the arbiters of what is and is not correct, what isn't right, or are we just building infrastructure for people to use? And there isn't an easy answer to that. I think even like if you're a crypto company and you just accept any token anywhere, there's a ton of reputational risk and issues you can have by letting frauds and scams and things like that exist and be supported by your technology. So there is a line to draw that's, in the self-interest of people who don't even believe in a Bitcoin only type future. But for the Bitcoin only type future, it is, I think, more challenging for some founders because um, you're limiting the ultimate market potential that you have in the near term. And that does give crypto companies a competitive advantage in the near term. And you could say that, yeah, have a long-term time preference and build for the long term, et cetera, et cetera. That's all true. But I think if you're in the shoes of a founder who has, taken their entire network to raise financing for an idea that they're taking a ton of risk on, and they have people dependent upon them, and they have pressure from their family and, their wife and their kids and all these other things, it's a lot harder to say we're going to limit our market size and think really long term. Some people need to say, is it our job to really be arbitrating this? And I think like Casa is a good example of how they've taken an approach towards that. But nonetheless, like they kind of drew a line of like, okay, we'll accept like one other asset because that's a huge market and we don't know, I don't personally think Ethereum is a scam. I don't know what that really means to say that. It's really impossible to like boil all this down. I think that there's been plenty of false marketing. I think people have been wrong about things, but it is an ecosystem of people and some people have good intentions that are trying to build solutions. Whether or not I think those are valuable is a different question. But I'm not in there's a lot of different camps for how people view this world.
Yeah, definitely. And I think, in blockchain or, Bitcoin world, crypto world, Bitcoin being such a grand invention in itself that, being first to market means a lot. Also, sometimes maybe this technology is supposedly better, but maybe isn't getting the user adoption. There's all sorts of things that can play out, and I take that same approach, especially when onboarding new people. I just tell them to stick to Bitcoin and try to help them the best way to enter the space in a way that protects them, and obviously teaching them principles, self custody, and things like that.
Mm.
Eric, you were quite busy with the seventh property last time we were speaking as well, and I just wanted to ask you, how's the development come since you read that book at that time, and things were quite busy for you back then. Have things slowed down now, or is there more competition in that space? Just how have things going since you've written the seventh property?
Dude, great. It's the writing that book was awesome. It's what kind of got me started in Bitcoin, and it was much more successful than I imagined. That's led me to get a lot more involved in the industry, and I've spent the time since learning a lot more. I guess I haven't really reflected on quite everything that's changed, but I mean, it's great, man. I'm traveling all over the world, talking to conferences about different topics. I think where I've focused my time and attention on, the book helped me understand that Bitcoin's going to win one way or another on some sort of timeline, and not to focus on the idea that there's going to be some sort of other competing form of cryptocurrency. So then the question is, well, if Bitcoin is going to win, then the end goal is for Bitcoin to become this global neutral monetary system. And Bitcoin can't do everything. It needs other protocols like the Lightning Network, et cetera, to provide all these different functions that either make it more efficient, they make it more private, they can allow it to be programmed in more complex ways. And there's a whole ecosystem building around Bitcoin of different protocols that are going to enable it to do that. And that's where I've been trying to focus my time and attention on is how is that going to happen? And that's where most of the debate in the industry comes today is how is Bitcoin going to scale? Is that going to be through the Lightning Network? Is that going to be through zero knowledge rollups? Is that going to be through Chami and eCash banks? And that's what I focus quite a bit on, is writing around that idea of what this Bitcoin native financial system is going to look like. So I think that is the biggest question in the world for people to be working on right now. And that's why I focus my time and attention on it. Because one, I think that there's infrastructure, companies, and tools that are going to be incredibly valuable in the long term. If we think Bitcoin is going to become this global form of money, then the infrastructure around it is going to be not only how is it built paramount to the success of Bitcoin itself, as opposed to just not becoming a digital pet rock, but it's going to be some of the most valuable like companies and protocols in the world that emerge from this too, because Bitcoin is going to be the most valuable. Um, so what I'm doing now is I'm raising a venture capital firm to invest in those types of technologies, and that's basically what I've been working on the past year, is how to get the right people involved, etc. And that's been my primary focus and attention. So I've been very busy. I've been working harder than I've ever worked in my life, and I'm over some big humps at this point, which has been great. But we're still not quite there yet, and yeah, but I've been focusing very heavily on that, working with different founders, talking to people about what companies, ideas, tools they're building that are going to enable that type of a future. Helping other companies with how they can get on a Bitcoin standard, things like that.
Right, right. Is there any nameable companies that you've spoken to, or someone or something that's doing something that really catches your eye or very unique right now?
Yeah, so I guess three companies that we're involved with right now before we close, but that I've been personally investing in that'll be a part of our portfolio once we close. There's a company called so the company's called GetBic. It's an Indian exchange, but they also have a remittance arm called Crobo, Cross Border is what that's short for. And they're like, basically the idea is that Bitcoin is this very efficient means of conducting remittance payments. When you have Bitcoin and the Lightning Network together, there's really no better way to move large amounts of capital. And that type of infrastructure should be used in a lot of different ways. But remittance payments is a quick solution that can be built today. And the largest market in the world for remittance payments is India. Indian diaspora that live everywhere is the largest diaspora population in the world. So in the U.S. specifically, it's estimated around 10 to 15 million from that group. It's a very large population that sends a lot of money home, and they're kind of targeting that demographic. And that's a great way that I think Bitcoin can be used today in its current form to enable a financial system to start building out. Another company is a company called Devify that I think that some Bitcoiners are pretty familiar with. HODL, the peer-to-peer exchange, it's that founder who started it. And he basically spun off an arm. It's more of an institutional grade way of getting collateralized, taking Bitcoin and using it as collateral to get a US dollar loan or a fiat currency loan. And it's a peer-to-peer type structure where they have an escrow that the Bitcoin gets effectively put into. You're like, okay, I want to get a Bitcoin collateralized loan. It's going to go into this 4-3 multi-sig. I control a key. The person giving me a loan controls the key. Devify the platform as a key, and then you guys elect for like a mediator to have a key. And it's just these escrow accounts. People come to different loan agreements, peer to peer, and then the Bitcoin gets put into an escrow as collateral. And then if something happens, then it can be resolved through that process of dispute resolution with those different keys. That's a great idea, to where I think I kind of view that company as in like a Goldilocks zone between the benefits that we want of DeFi without the costs. DeFi is basically a tool that can be used to streamline collateralized lending, and but it has a lot of UX problems because not everybody wants to do all the things you have to do to make that happen in DeFi. And I think that this is just like a centralized company platform that's just taking a technology and allowing people to use Bitcoin really efficiently for making loans on it. So that's cool. So it has the benefits of like centralized company UX, and it also has the benefit of not having rehypothecation risk when you get into a lending arrangement with a counterpart. And that's kind of like the whole point of what we're going for anyways. So, so that's really cool. And I guess the other company that we're looking at right now is a company called Citria that's building a zero-knowledge rollup. And Bitcoin, they don't have a shitcoin. They're just doing it the right way. And they're basically saying that if we can take the Ethereum environment, we can make that something that's just directly connected to Bitcoin, then Ethereum developers are going to have a much stronger incentive to want to build technologies and projects using Bitcoin as collateral instead of just tokens. They will be able to issue tokens. It'll be a free market where people can do what they want in that type of an environment. But nonetheless, Bitcoin is going to be used instead of Ethereum is like the gas and the fee for operating in that type of a virtual machine. And that's cool. I think that we're seeing a lot of that happening right now. So people are shifting over to Bitcoin. They're realizing that eventually, one way or another, the most valuable form of collateral is what people are going to use for money. They're going to want to have to bridge through 4 blockchains and layers to make something happen, and then eventually just try to trade out of it for Bitcoin over time. So the more direct that infrastructure is, the more valuable it's going to become over time. I don't think that's going to happen overnight. There's some really strong network effects that Bitcoin has to fight against in the developer community, but it is happening, and I think it's going to continue to happen.
Yes. So a couple things there. Like I think you just explained it, but just very simply, could you explain zero knowledge rollup?
Not really. They're like, it's funny. Like a year ago, I read into it. The actual cryptography, it allows you to prove that you've made a calculation without revealing the calculation itself. And it's similar, it's conceptually similar to the idea of like a signature for a private key, where you can reveal that you have knowledge of a private key without showing the private key. So the idea for these zero knowledge rollups is they're an efficient way for us to prove that a form of verification was done. And that rather than creating some sort of really data intensive manner of verification, if you just push that proof, that idea that we verified that all these rules have been followed, and you put that, you inscribe that into the Bitcoin blockchain on a periodic basis, every 10 minutes with each block, then you can capture some of the security benefits that Bitcoin has by saying everything. If we have all these different, all the software has performed these calculations, and under these rules, and we can verify that that's all been done, and we can ascribe a history of that into the Bitcoin blockchain, effectively creates this layered form of architecture that allows us to do that. It's not as competitive with what exists currently. All this stuff's centralized today. So like, this is all just like, there's a vision that it will become centralized or decentralized. And I don't think that'll be, it remains to be seen whether or not that's going to happen with rollups. And the first time that I heard about rollups, that was kind of my take, is like, okay, if that even is going to be possible on Bitcoin, we need some sort of soft fork, and whether or not that even happens or how long that's going to take is going to be a very long time. So I started focusing on other areas that can exist today. And rollups are interesting today once BitVM emerged as a bridging mechanism that doesn't create some sort of quote unquote trustless mechanism of bridging. But it does create a strong minimization to the solutions that like Liquid uses today for bridging into a rollup. It's something that might be more marketable. We don't really know. But nonetheless, even like these rollups that do exist today, they are centralized. And that's like a bet people are making is, will they actually be able to get to a decentralized state, or will people even care? Because if you look at crypto, it's like you have all these different layer 2s, and then Coinbase creates their own layer 2 within Ethereum called Base, and it's just one centralized sequencer. And they have a bunch of money and a way to do business development, and it runs really fast because it's completely centralized and people just want to use that. And it's like, okay, well, if people are building all these decentralized apps on a centralized sequencer, bottlenecking the whole thing, then is it just that consumers don't really care that ultimately the efficient system will win, and we just have this whole runaround of a decentralized protocol? And really, it's a race to the bottom. That's what a lot of my research goes into, is I wonder if it's that, not that we want to have a decentralized system as much as we want to have a decentralized system of centralized systems. That's where I think there's two different views of the world, where people are like, we could have this decentralized sidechain type structure that's a roll-up, that's a sidechain like Liquid, whatever you want to. There's different terms for things that are just centralized connections to another environment that allows us to do more things. And I think that vision one is centralized today. Two, even if it does get to a decentralized state, there are probably natural incentives for it to centralize over time. And then the question becomes, okay, so is this just all a race to the bottom towards some sort of centralized structure? In which case, why don't we just start there? And the whole point is that if we're using Bitcoin and other systems, we don't want it. We want to fix fiat money. And that doesn't mean that we need to remove trust from every last thing that we do. It means that the system needs to be resistant to political capture. Self-custodial Bitcoin, peer-to-peer payments, all the cost and effort that goes into that. In a perfect world, we want everybody to do that. But the reality is that in societies, people create wealth because they specialize. And everything I specialize my life in, everything I don't want to trust other people for that I want to do myself, it has an opportunity cost. So if I don't trust that the steak I'm eating is going to be healthy and I want to raise cattle and I want to slaughter them myself and I want to butcher them myself, that's a huge opportunity cost of time. Because if I was a genius developer, I could be making quite a bit more money doing other things. And that's where wealth is created, is through specialization. We trust people to do everything in our lives all the time. The question is where we have very significant conflicts of interest in certain services with people, we want to make sure that we're handling that ourselves. And that's the problem with money, is that money has a greater conflict of interest than anything else. The production of money through a central bank is the greatest conflict of interest that exists in the world. Bitcoin solves that by creating a neutral system for production. It's not controlled by anybody. We want a system around it that maintains that. And that doesn't mean that everybody in the world has to self-custody for that to happen. It means that enough people and enough tools need to exist so that there is a large proportion of the market that does, and that if anything bad were to happen in the system, people can always leave in self-custody and do all the effort themselves. But the fact is that to learn how to self-custody, to operate yourself as your own bank, all of these things are, for a very large percentage of the population that aren't like Bitcoiners, time-intensive skills. That might be a lot easier over time with new generations, and if it becomes a part of education, the same way that computer science is a part of education. But these are very long time horizons we're talking about here. And from a practical standpoint, I think we're going to see trust and custodial type systems continue to emerge. And we want to have systems that optimize for that. And that's what I think is really cool about eCash, is that it's probably the best way to create the most decentralized banking system, quote unquote banking system we could have. It's a trusted multi-sig, and it's basically like what I think crypto is, just doesn't want to call itself. And I think that I wrote a paper called Banks Without Bankers, and it's basically around this idea that we could create a system that, because it's so cheap to quote unquote set up your own eCash mint or bank effectively, that banking becomes such a decentralized function that it could never be systemically captured. That's always been the problem with banking throughout history, is that it gets captured by politicians gradually over time. I think that we can use software, automation, cryptography in new ways to where we could build effectively a financial system architecture around Bitcoin of all these little centralized points of trust, but there's millions of them all around the world, that it's hyper competitive. And because it's hyper competitive, it's going to act in the best interest of the consumer. That's the number one defense we have to make sure that people act in accordance with us as a competitive environment. And because it's so decentralized, it would be impossible for government to capture it. Like, that's kind of the ideal. Am I certain of that? No. But like, I'm reasoning through what that looks like. And there's with eCash mints, here's the way I think about it. Like, what made Bitcoin decentralized and what makes Bitcoin far more decentralized than any other competitor that exists? A low cost to participate. And that's pretty much what the block size wars is about. That's what a lot of soft fork changes are. It's like adding this code isn't really that big a deal, but it's the second order effects that occur from this adding this code. Is it going to be incredibly expensive to run a node one day? Am I going to have to go drop $10,000 just to go set up a full node? And if that happens, it's going to massively centralize the network over time. Like, that's the key thing, is that it needs to be very cheap and easy for most people to be able to participate in the network. And that is the number one thing that I think makes Bitcoin decentralized. And I think we can take that and like, let's compare that to today. Let's say I want to go set up a financial institution or bank, like with what I'm doing. It's a bitch. You have to get all these regulators, you have to get all this financing, you have to get all these licensing. Like if you want to go set up a legitimate bank in the US, you need like, I don't know, $10 million in upfront financing to even attempt, right? Like it's not something that anybody can go do. Now you take that type of an idea and we create this permissionless way of anybody can set up an eCash mint and anybody can choose who they want to trust. And, you know, governments in some jurisdictions could attempt to stop this over time, but they're just going to be able to DOS it the same way with Bitcoin. It's like you can try to play whack-a-mole with shutting off Bitcoin node operators or whatever you want. But it's going to be the same thing with running de facto banking infrastructures. You can set up eCash mints whenever you want. It's going to be very easy to spin them up. Some of those can be federated, which just means they're controlled by a group as opposed to one signature, one person controlling the mint. And you can scale that to whatever you want. So we don't know how it's going to be used or how it's going to grow, but I think this is a vastly better way for the custodial financial operations of the future to emerge than for everything to just flow into Coinbase. And that's kind of the argument, is that Bitcoin's going to grow really rapidly. Most people don't care about the things that Bitcoiners care about. A ton of value is going to be flowing into custodial solutions. And I think long term, we could actually create a very decentralized system of centralized banks that are hyper competitive through something like eCash mints. That might be a way better way to scale, quote unquote, economically, like scale Bitcoin than all these de facto centralized technologies that people think with fancy math that might do it. So anyway, sorry, I've been rambling a bunch about that, but that's kind of my view on the world.
Yeah, no problem. You gave us a lot to digest there, and I probably could have, I could probably, get another 10 questions out of just what you just said there. But well, I guess it comes down to a lot of philosophical views. I mean, in the Bitcoin space, some people are very on different levels of the spectrum and what they want to see and how this plays out. Usually, the future is something not exactly what we predict, but a version of it. So it's always exciting to see this develop. And I'll be right here with you, Eric, over the next couple of years and see how this plays out. But maybe we'll get into a little bit of a more fun question, and if you're willing to answer. But the question is, what is your high prediction this Bitcoin cycle? What do you think we top out at?
I think we're going to I think we're going to 300K.
300K. Is that your like conservative bet, or like top?
That's my conservative. I think that's
Okay.
what I'd say is like, I think we're going to end up somewhere in that range. And top. I don't think we get to a milli this round, but I think we can break 5.
Wow.
Like the way that I view all these things is that Bitcoin is always one massive headline away from a crazy rally over the next few months. Like every single time you start to get to a certain point of doubt, it's like there's always just some massive news that comes about. And like when I first got started in this, I remember when I first got started in this and I saw the Winklevoss twins go on CNBC, and I was like, oh crap, like look, they're going to talk about Bitcoin and people are going to hear about that. That's huge. And to think about today, how it just like political candidates are now using Bitcoin as a platform for some sort of, essential policy stance that they have to have, like how much it's grown over time and how much more it's become a part of just mainstream dialogue is massive, and it changes completely. And it's like we're in the depths of a bear market, and all of a sudden, announcement from BlackRock, like we're pursuing a Bitcoin ETF, and like that changed everything. And there's right now, this very second, there's a bunch of people around the world who could potentially be those big headlines that are all having conversations about how they want to, develop a Bitcoin strategy in one way, shape, or form. And like Bitcoin to $500,000 scenario, it's like, well, we have certain politicians that are supporting this. We have a politician that wants to back Bitcoin. Perhaps they eventually get to the point where they say, yeah, we're going to set up a reserve fund. That was the popular vote that I was surprised really changed the way our campaign was getting support. Maybe it starts happening at a state level and it's more gradual, and then it doesn't happen for another presidential term. Argentina is on the cusp of probably making some sort of announcement like this. What happens in 5 years when we effectively have a consortium of emerging market economies that are trading and holding reserves in Bitcoin? What happens if Saudi Arabia makes an announcement? What is Iran going to do? There's all these geopolitical considerations. If we go into another world war, the I think that could have a very negative effect on all markets at a certain point in time, but it's going to make the case for a unipolar neutral type currency system to emerge much stronger. And eventually that's going to flow back to Bitcoin. It's going to flow to gold as well, but it's definitely going to flow to Bitcoin. And all these things that we just don't even know yet. The financial institute, the amount of business development that BlackRock's doing right now, and how many more financial institutions are going to start adopting it, and some major voice that's going to get behind it in the financial world. There's so many investors that I think are, 9 to 12 months away from starting to flood into it. These guys just need social proof that, oh, I'm not the cowboy at my firm who jumped into Bitcoin. And BlackRock is giving them one of the largest forms of social proof they could have on a platter. To where if something ever goes wrong in their minds, they can point to, well, BlackRock was pushing this and they're the first to adopt it. And there's all the data in the world to support why you should, at a minimum, have a percentage allocation in a portfolio if you're like a large asset manager. So, I mean, there's a million things happening to where a major headline could pop up tomorrow and I'm not surprised at all. And I don't think that's priced in. And I think it could be really large. And it also couldn't happen for a while. But like Bitcoin's one major headline away from very large rallies at any point in time.
I like that answer, Eric. I like it a lot. Yeah, no, I feel like I've become less bullish, like as terms of how many X we're gonna go each cycle since I've been around in the beginning. So I try to tell people like very conservatively what obviously I think it's going to six figures. 2 or 300K. I don't know. A lot of people are very bullish. I tend to be. And hopefully we'll have an exciting year. Usually 6 to 10 months after the halving, we see new all-time highs. We saw something unprecedented, which was a new all-time high that this early into the cycle. Did it happen? When did the new all-time high? Was that before or after the halving?
Ooh, I think that was pre-halving, wasn't it? Yeah, it was pre-halving. Yeah, for sure.
Yeah. So
because
that's something.
Yeah.
Right. So another lighthearted question here for you, Eric. We were both at the Bitcoin Montreal Canadian Bitcoin conference. What brought you to the Canadian Bitcoin conference, and what was your experience like?
Canadians are super nice guys, and everybody's really nice to me out there. That's one of the things. Montreal I love Montreal. That's one of the coolest cities I've ever been to. I could live in Montreal for sure. Well, I mean, I was there during the warm part, so I'd have to experience the winter first. But yeah, I mean, BTC Sessions was one of the first people who kind of got my book started. I think that got me involved in a lot of the Canadian community. There's a lot of great Bitcoiners up there. And yeah, I'm always happy to just come out, support, talk at different conferences and meet people. But it was a blast, man. I loved it.
What now you're traveling around quite a bit now from what I understand, and hitting a lot of different conferences. I was talking to the event organizer of the Canadian Bitcoin conference. I think that was the second year that they had it on, and we're just discussing things. How could they improve it for next year? Was there any feedback that you might provide? Good or bad feedback, and what maybe things worked at other conferences that maybe worked a little bit better than the Canadian?
I mean, like they're growing, and I think that they did a great job this year. I think it was much better than last year. Big improvement, and I think they do a great choice with the venue, how they organize speakers, people that they're picking to do a lot of this. I think it's all been great. I think a lot of it just comes down to continuing to do it and grow it, and get more and more people involved. My primary point of feedback would probably be in the speaker lounge. They were always a little bit short on coffee, so maybe a little bit more coffee next year.
That's really good advice, man. You can't have a shortage of coffee. That's catastrophic.
No, they need
So,
that.
so,
Yeah.
so you're a coffee over tea guy.
Yeah, I probably need to at some point in my life wind down my caffeine consumption, but I'm a Celsius and Zen guy. That's like my diet until about 2 o'clock in the afternoon. Then I'll start eating.
Okay, so sorry, Celsius, and what's the other one?
Zen,
Zin.
nicotine pouches. Yeah.
Oh, is it? Okay. Nice. I've been drinking the those Alani energy drinks before the gym lately. You ever tried those
Okay.
ones?
Yeah, I don't know if they do. The Celsius like been blowing up everywhere, but yeah, this is my
Okay.
crack.
Yeah, we all have our crack. Um, let's
Mm.
yeah, next time I want to do this based. I would love to do this. I got a setup I can use here in Niagara, man. If you're ever coming through Niagara region, I'd love to sit face to face. It's always a little bit different. I'm starting to do a few more face to face sit down interviews, but yeah, if you're ever coming through this area, man, I'd love to sit down with you face to face and have another interview. But
Yeah, totally.
so another one of my questions, and this kind of like goes back to what we were saying when you, just about the history of money, the Federal Reserve, and a lot of people don't know that there was attempts at central banks before the Federal Reserve, and I think you were saying that the reason why a lot of failures is come through politics intertwining with it. And was that why we've seen failures before the Federal Reserve, or why did those fail before the invention?
So it's I mean it's there's case by case basis type situations. In the US specifically, so there's been a lot of different central banks that have emerged in different parts of the world. And like a lot of my research is focused more on Western history, and I don't have as strong of a background in like Eastern banking systems. But there's very different stories that have been told over there too. Um, in the US, there was effectively three central banks that existed prior to the fourth, which was the Federal Reserve. Um, the first was created for a short period of time, effectively to finance war and colonial independence. The second um, ended in fraud, and that was in a campaign battle between Andrew Jackson when he was running for re-election and the chairman of the central bank, Nicholas Biddle, at that time. That bank was called I might be mixing up, but I'm pretty sure that one was called the Bank of North America. Um, but I might be mixing up because they had a few different, very similar names over time. And then effectively what happened is that like Andrew Jackson was campaigning that he was going to close the central bank, and the central bank was in a very powerful position at that point. So the chairman was doing all these things to try to undermine Andrew Jackson. And what was crazy is that the chairman, Nicholas Biddle of that bank, he actually deliberately attempted to create an economic contraction and then blame it on Andrew Jackson to hurt him in the campaigning process for reelection. And then once Jackson was reelected, it's cool. He was such a Bitcoiner. Like he was campaigning with gold and paying people in gold during that period of time. So like if Bitcoin existed, Andrew Jackson was like he was like a Miley type guy, and yeah. So once Andrew Jackson got into office, he removed the corporate or the federal treasury from the central bank, which was a huge part of their profitability, and effectively put them into this negative position. And then it was found out that Biddle was deliberately creating economic contractions. He was charged with fraud, went through like a process where he was eventually thrown in jail for that, and they closed that central bank. So that's the story of the second central bank in the U.S., and that's a wild story. Um, and there's effectively there was a period of time where we went into this wildcat banking system before uh the Federal Reserve existed, and that means that we had a private banking system with no central bank that controls the issuance of currency, and all banks are issuing currency effectively when they make loans. Um, so that's existed before in plenty of times in history. There have been many forms of like private banking currency issuance, and a lot of the arguments for like, you know, arguments that I make for like eCash mints are kind of built on that idea. So the term is free banking, where you're free to create your own bank, create your own currency, and then whether that currency is competitive in a market comes down to, what you're backing it with and how much you're backing it with, your history of solvency, and a bunch of other factors of whether or not people want to use your bank. So there's a bunch of different observations throughout history of what free banking was. What happened in the U.S. was not a good example of free banking. It was very problematic. And when wars started happening and there was a need to actually print more currency, there was a lot of control at the state level to manipulate these banks to help war financing. There was all these regulations put on how they could actually create things, which screws up the incentives of free banking. So a good example is like, a lot of states would put in laws of you had to have a certain amount of your reserves were bond collateral of the state. So if the state went, it allowed the state to issue more debt, basically. You're in one state, they want to issue bonds so that they can finance whatever the hell stupid thing they want to finance, and then you're forced to use some of that as collateral. So they're the same thing the Federal Reserve is doing by incentivizing people to, use U.S. Treasury government debt. It's a similar concept, trying to force people to use the debt of the country as collateral for something, when otherwise they'd probably just use gold or something else. So like there are all these things that were screwing up that system. The best examples were actually Canadian and Scottish free banking systems, where they were kind of the most free, but they're these are very complex situations, and there's a lot of detail around all of it. But anyways, the history of banking is really complex, and to tie it back to your original question around like central banking, that kind of wildcat banking system in the U.S. existed for a while and had a bunch of problems. And then the Federal Reserve was put in as, this idea to create a solution to those problems, and everything the Federal Reserve has done since for its intended purposes has been a massive failure, with the narrative that central banks were, the Federal Reserve was created to create economic stability, when it's created a recession on average every 7 years since its inception, is a major issue, and completely contradicts the whole narrative that's being told in colleges, et cetera, today. And, there's Nobel laureate winning economists who all have said that decades ago. This isn't news. It's just not what's being, the primary form of education in economics. So, and then the Federal Reserve was created in this whole backdoor. Everybody's heard of, Jekyll Island and the meeting between politicians and bankers that was, put together a large campaign and enlisted academia and all these other variables that allowed the Federal Reserve to emerge in the first place. And they didn't call it a bank, and they said it had reserves. That's why they call it Federal Reserve. It's like a branding situation, because people had a very bad taste in their mouth about what banking really is when it was created. And then here we are today in the largest integrated global fiat system that has ever existed. We went on fiat money in 1971 in the US. All the other major central banks are on fiat money. And we've never in history had a global integrated fiat system before, where all the central banks act in accordance with each other. And debt in proportion to our economy size has, in absolute terms as well as in proportion to our economy size, is the largest it's ever been in history. And there's a lot of signs that are pointing to we actually are getting close to an end of all of this. And it's a perfect story to have something like Bitcoin that is emerging in a very material way. And that's why we need to get this financial system set up around it, because if we have, a billion people that want to flow into it within the next decade, we're not quite there yet. And I think it's very important that we do get there and move out of a global fiat system to a globally neutral system for the first time in history.
Very quickly, what you've introduced the seventh property of Bitcoin to us. What would you say the most important property of money's been over the years?
Scarcity. Scarcity is definitely the most important thing. Having something with a degree of known scarcity enables economic planning, which enables capital allocation over time, and surprises and changes to that are, benefiting one stakeholder group at the expense of another is kind of the major problem that distorts capital allocation.
We're just at the hour mark here. I'm going to get to the end of this to let you get going on with your day. I really appreciate your time and coming back onto the show. Hopefully we can do this again and keep up with your story here. There's any last words of wisdom you can give us or anything that's really important that we may have missed? If not, maybe just give my listeners, let us know where we can follow you and learn more.
You're Brad. I think you're a great testament to this, right? Like, you started this podcast. I remember when we first recorded years ago, you're just beginning, and here you are. You're building a subscriber list, even low type preference, grinding it out. You're seeing all the value that you can find in this community, and that what we're doing is something that's very purposeful. And that's what I find is that, and whether that's Bitcoin or something else in your life, you need to find something that's meaningful to you, and that is usually something that's right in front of you, and you have a hard time figuring out how to find a way to work in it. And I think the reality is that there is one way or another. If what you think is important in the world is something that's valuable to people, then there is a way to create a job, make your own job in it, and to do that over time. And most people are not doing that because they don't want to grow a pair and just go after something. And so that's my advice, is to grow a pair and do something that's meaningful, that you think is solving the biggest problem in the world, and have the patience and have the commitment that it's not going to be some perfect silver bullet to all the problems in your life, but over time it's the hard parts of that process, and then the really big wins that make this all worthwhile. And it's really cool, and you can find quite a bit of that in Bitcoin. If you're thinking about getting involved, do it. You can find me on Twitter at my name, Eric Yakes, and if you're getting involved, ping me. I'm always happy to help give people advice.
I much appreciate that, Eric, and definitely we'll include your link in the show notes. And that's what's awesome about Bitcoiners is people are so quick to help you out and help you understand this complex space. One last question: you still been lifting?
Oh yeah, bro, big time.
Awesome, man. There's my screen cap for the thumbnail right there.
Yeah.
Okay, man. Thanks for doing this, Eric.
Yeah, of course, man. Take care. Have a good day.